Solved problems. Business purchase accounting. Business purchase account. Goodwill account. Balance sheet after the purchase. Problem. The following are the balance sheet of A Limited and B Enterprises as at 30th June. A Limited balance sheet as at 30th June 2003. On the asset side, freehold premises 100,000, current assets, debtors 35,000, stock 25,000, cash in bank 90,000, total current assets 150,000, total assets 250,000. On the liabilities side, ordinary share capital of 1 each 200,000, share premium 20,000, profit and loss account 10,000, creditors 20,000, total liabilities 250,000. V Enterprises balance sheet as of 30th June 2003. On the asset side, equipment 60,000, less depreciation 28,000, net equipment 32,000, current assets, stock 45,000, debtors 18,000, bank 5,000, total current assets 68,000, total assets 100,000. On the liability side, capital 60,000, add net profit 15,000, total 75,000, less drawings 10,000, net of capital 65,000, creditors 35,000, total liabilities 100,000. Additional information. On 1st July 2003, A Limited decided to buy over the business of B Enterprises at an agreed value of 90,000. A Limited will take over all the assets and liabilities except bank balance of B Enterprises. The purchase consideration is to be settled by the issue of 75,000 ordinary shares and balance in cash. You are required to prepare purchase of business account, B Enterprise account, balance sheet of A Limited on 1st July. Let us pass the journal entries at the time of purchase in the books of A Limited. Equipment debit 60,000, stock debit 45,000, debtors debit 18,000, business purchase account 123,000 credit, being the assets of the B taken over. Business purchase account debit 63,000, accumulated depreciation on equipment 28,000 credit, creditors 35,000 credit, being the liabilities of B taken over. Business purchase account debit 90,000, B Enterprises credit 90,000, being the business purchase price. Goodwill account debtor 30,000, business purchase account debtor 30,000, being the goodwill on the purchase of B Enterprises. Business purchase account. On the debit side, equipment debit 60,000, stock debit 45,000, debtors debit 18,000, goodwill balancing for 30,000. On the credit side, accumulated depreciation of equipment 28,000, creditors 35,000, B Enterprises 90,000, total debits 153,000, total credits 153,000. B Enterprises account. On the credit side, business purchase 90,000. On the debit side, ordinary shares of 1 each 75,000, cash 15,000, total debits 90,000, total credits 90,000. Balance sheet of A Limited after the purchase. On the debits, on the asset side, equipment 60,000, less depreciation 28,000, net of equipment 32,000, goodwill 30,000, freehold premises 100,000, current assets, debtors 35,000 plus 18,000 53,000, stock 25,000 plus 45,000 70,000, cash 90,000 minus 15,000 75,000, total assets 360,000. On the credit liabilities side, ordinary shares 200,000 plus 75,000 275,000, share premium 20,000, profit and loss account 10,000, creditors 20,000 plus 35,000, total 55,000, total liabilities 360,000, total assets 360,000. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.